Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. It's created exclusively for NMP TV, and it's brought to you by our good friends at PRMG. They're working for your best interests. Oh my goodness, what a week! Wow, yields soaring. The 10-year treasury hitting exactly on the target we told you to look out for, 1.6% on the 10-year before backing off nicely to end last week. Thank goodness for that. Now, we have seen some exhaustion in this move higher. We were hoping, as you know, that 1.37 would hold, and it was a valiant effort for most of last week where it hit on it, and then finally, once that level broke, man, things got out of hand. I'm sure you were looking at prices in your rate sheets moving up quite dramatically and wondering what is going on here. Listen, you can't focus on what you can't control. What you can control is that the purchase market is red hot, as evidenced by the news that came out on new construction, on existing homes, on contracts, all of them super hot, good appreciation levels showing about 10% appreciation in real estate, and it's going to continue. So you have to get into that game, use the tools at MBS Highway, which will help you decide how much to bid over ask, when you will break even in the future based upon how much over you're bidding. Will it take you 3 months to recover the amount you're paying over asking price, or 10 years or 3 years or whatever it is, so you can evaluate it better and make that decision? Realtors are going nuts for this tool. You need it now. Debt consolidation, there's equity in homes. Use our tool for that. These are things you have to do. Plus our scripts in Social Studio. So on your social platforms, you can get out there and give information that people right now absolutely desperately need. Because it didn't help that the Fed's talking about, hey, we're going to keep rates low, keep rates at zero, and then your customer sees interest rates going up. They can't get it. We'll help you explain all of that information. This is what you need right now at this point in time. It's absolutely critical. Where do we go from here with rates? Listen, we're at a different level here than we have been experiencing with this rapid move. And plus, while we expect them now to ease off a little bit and come back down, we're not going to be in a position where we're going to right away see the 10-year break underneath 1%. There's a lot to be concerned with as far as inflation fears, but we're not yet seeing it. We got the personal consumption expenditure last week, and that personal consumption expenditure came in pretty modest, pretty tame, only 1.5%. The Fed's looking for 2 or maybe even more. We're not there. So the market being worried about this is one thing, and we're seeing rates rise on that, but the actual levels of inflation have not yet hit. And then when you talk about stimulus, one of the big fears that was out there, not debating whether it's a good idea or a bad idea, is this minimum wage rise to $15 an hour. That's not going to be part of the $1.9 billion stimulus plan that the House is voting on. That's going to be taken out. So the bond market says, well, that's less inflationary. So that actually helped things along a little bit. Listen, we got some numbers on personal income as well, up 10%, but that's not because people are making 10% more. This is because we're seeing some boost from additional money from unemployment. We're seeing a boost from this original stimulus plan of $900 billion. So what it shows you is the transient nature of these things. This $1.9 trillion deal coming on the heels of a $900 billion deal. These numbers are going to be levels that will, again, push things up, scare the markets, but I think they will wear off. That's what we're talking about later this year, certainly into 2022. Rates having the opportunity to back down. We're thinking you're going to see a recession in 2022. So while I know this is a time right now that you're concerned about things, you're seeing rates rise a little bit here, you can still have a great year. Don't think that things are over. Just shift your focus to the purchase side, to debt consolidation, and there's still a lot of people that can benefit from a rate and term. Remember that people have made 13% more equity in their homes. So even if rates are about the same as they were last year, which they're pretty close to that, it still might pay to refinance to remove MI. So there's lots of opportunity for you now. The best one could be to get on MBS Highway if you're not on it already. Talk to you next week. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.